Man, is it really 3 days to Christmas Eve? That means we have a holidays coupon code linked below for you. Check it out. Morgan Stanley warns that in early 2023, earnings will, quote, collapse, bringing the entire stock market down with them. In this video, folks, we're going to talk about, is this Christmas going to bring us a Santa Claus, and is Morgan Stanley going to be wrong, or is it going to bring us the Grinch? After all, we just started with earnings season as we heard some news from Nike and Fedex, and I think it makes a lot of sense to take a little bit of a look into what these tell us, so that way we can tell, are we ready for bullish signals, or do we need to be a little bit careful with how bullish we get? Hey everyone, me Kevin here. Let's take a brief look at some of the highlights that I found in the Nike and Fedex earnings calls, and then see what kind of takeaways we can draw to see, is Morgan Stanley correct? Because at first glance, Nike's earnings were actually up revenue-wise 17% from a year ago, and earnings per share was up 1% from a year ago. Now, Nike already had 2 quarters of negative EPS. That implies they've already gone through an earnings recession. So is it possible the earnings recession is actually behind us and not in front of us? In which case, would it mean that things are a lot more bearish and expectations are a lot more bearish today than they really ought to be? Well, let's take a look at these earnings calls and get a little bit of a feel for what we can glean. All right, so first things first, we're going to look at the Nike earnings call, and I want to show you the following. I noticed this here. They say that we're concerned about macro uncertainty and the indicators we're seeing broadly for the consumer. This is pretty generic. I think at this point, everybody would be stupid not to be concerned about macro uncertainties. Over the last 90 days, though, we've seen strength. Macro conditions, though, still exist. They're still there for the consumer, so we're being cautious. Now, I find this quite interesting. Nike is telling us, look, the consumer is facing the macro headwinds that we're seeing, but they're still buying our product. Even in China, people are buying our product. Now, it's worth noting that in China, a lot of these were before COVID restrictions were lifted. So we started seeing sales rise. And look at this, in the last week of November, 1,500 of their stores were closed. That's roughly 5 times the number of stores that were closed on average throughout the entire quarter. And we also saw traffic impacts as China navigates its COVID policy. So this right here is definitely a reiteration that we are seeing an inflationary anchor in China in December. This is kind of what we're feeling. We're seeing this with reports from Tesla, from automakers like Toyota planning to suspend production for 16 days in Japan. That's like half the month. That's crazy, right? As Asia demand falls off. We saw it with Bentley. We're seeing it now here with Nike, that China is probably going to be an inflation anchor. What does that mean? It'll bring inflation down at least for December, January, maybe even into February as China goes through their new year. And we end up seeing that COVID really potentially weighs down demand and pricing in China. Now, there's always the risk that this ends up hurting supply chains, but we'll talk supply chains in a moment. So far, though, what we're getting here from Nike is that, hey, look, we're actually doing better than expected, which is somewhat bullish, but we're cautious. And personally, I think that cautious optimism is certainly a lot better than the worst case scenarios that everyone's been painting. That, oh great, here comes the second 50% decline in the stock market when we go through the real earnings recession, right? Now that could still happen. We don't want to get overly bullish here, right? But this is kind of interesting that Nike is actually arguing that they're still seeing in a promotional environment a lot of full price realization. Now, generally, that's a sign of pricing power. However, I had to put a little bit of an asterisk on their pricing power when I found out that their margin declined by 3%. 300 basis point decline in gross margin is not a sign of pricing power, right? Even though they could be achieving higher pricing realization, at the same time they're complaining about higher freight costs, right? While FedEx is basically saying the opposite. In my opinion, they're lacking as much pricing power as they think they have. But this is a sign that, hey, the consumer's still alive. The consumer could be giving us better earnings than we actually expect for Q4, but let's not get carried away here into saying that this is fully bullish. EPS going up 1% year over year for Nike is not fully bullish, but it's also not fully bearish. It's not that, oh my gosh, 50% downside, right? And this is why we're seeing Nike stock rally today, because markets are going, that's actually not that bad. In fact, that's potentially why markets overall are trying to move up. At the time of this recording, the Nasdaq's up about 1%, and stocks are trying to rally up on this idea that maybe Q4 won't be as bad as we think it is. Well, I love hearing this. Transit times continue to improve and the flow of supply is normalizing. This is really good. We want to see supply chains normalize. And I did not see any red flags from Nike that the COVID shutdowns in China, even though those could be a demand anchor, right? Disinflationary. I did not see any complaints that all of a sudden supply chains were being affected because of COVID in China. Remember, Vietnam, here it is, look at this, Vietnam was shut down for 15 weeks a year ago. That led to a lot of inflation and supply chain problems for Nike. We're not seeing this. So in my opinion, so far this Nike earnings call, whether or not you care about Nike, right, is actually more positive than it is negative for the market. Smoothing supply chains, disinflationary pressures from China, no indications that COVID in China is actually causing supply chain hardships. It just might be a demand decline, which is actually good, right? That's literally what you want. You want supply chains to normalize, not get worse, and get better instead, and you want demand to come down. That's like, this is so far perfect. Like, shh, this is good, okay? This is a good thing. I don't want to get super excited and bullish because I'll start YOLOing again, okay? I'm just kidding, okay? I really try not to. For example, this morning we activated in the Stocks and Psychology of Money group a really cool volatility play. Now, I'm going to give you a little bit of insight here in a volatility play, and if you're a course member, you could see exactly the details of that play and a little bit of background in terms of what I'm doing with my finances in the short-term trade section. I gave a big paragraph this morning before market opened and prep. But anyway, a volatility trade is where you look at, okay, where's volatility low? And when volatility is low, where can you potentially go in for a straddle where you go buy a call and you buy a put? And what you hope is to buy a stock that is at some kind of support level, like potentially a bottom, and you straddle it, hoping that the stock either plummets or moons off of that bottom, that it doesn't trade sideways. And you pick one that has really, really, really low historic volatility. So when that happens, volatility booms and the value of your options goes up. So volatility increases the value of options you've bought. And then, of course, if you have a straddle, you're playing both sides. So you're actually not making a directional play. You're just saying, give me a direction in some direction. And so I made about an $80,000 move into that. And it's a short-term, like 30-day option play. That will certainly close out before the end of the 30 days. But so far, knock on wood, it's doing really, really well. And so I'm excited about that to continue. I'm looking at it right now and I'm like, let's go. Let's keep that going. Okay, so this is good for Nike. Now let's talk about Fedex, okay? What do we got to know about Fedex? Well, Fedex is interesting. So Fedex says the declining demand trends we saw at the end of Q1 softened further. Okay, I actually like that because I will not buy fulfillment companies or shipping companies. I don't think they have pricing power. I'm a big fan of PP. Y'all know that. I want PP everywhere. I want big PP everywhere I go. That's all I want in my life is PP, pricing power. That's it. That's all I want. Because if you have pricing power, you're not in an industry that is in a race to zero. That's what fulfillment is in. They're in a race to zero. Target, Walmart, Amazon, FedEx, UPS, they're all in a race to either zero profit or the fastest possible delivery timeframes. And that's not a pricing power business. But anyway, declining demand trends we saw at the end of Q1 softened further in the second quarter, and we are moving faster with more determination to accelerate our cost actions. Okay, J-Pow right now? This is J-Pow right now. Woo, yeah. Okay, that's what Jerome Powell wants to hear. He wants to see, yes, cut costs, good, lower demand trends. Good. Softness. Now they do say, and I think this is a cop-out at this point, okay? At this point, I think companies saying this is a cop-out. They're saying, oh, challenged by volume softness and high inflation. I think the high inflation is old school. That's in the past, because they even mentioned that they've seen, in a later part, they mentioned they've seen costs come down, like gas prices come down, which have actually reduced their costs. So sometimes I think when they say high inflation, they're kind of copping out a little bit to try to soften the blow of like, hey, look, our demand is suffering. But what I want to glean from Fedex is what's happening with demand, and it's clear, lower demand environment, and so therefore they're spending less at Fedex. This is good. This is deflationary, right? Certainly disinflationary. They also mention the industrial economy is slowing. That's manufacturing, that's components, that's business fixed investment, that's massive utility scale solar panels, or at companies that like Amazon putting solar panels across their entire roofs, buying new machinery, right? Everything is kind of slowing down. This is a good early leading indicator. Europe being hardest hit, that's not a surprise. And now another thing that is also very interesting is they talk about e-commerce going through a reset here. Look at this. They don't tell us that macro is so bad. This is another one of those where it's not like, no, this doesn't look like a 50% great reset still coming ahead of us. This actually looks like some good news, some bad news. Yes, demand is slowing. That's going to be bad for some companies and shipping companies who are generally product agnostic, right? But what you have here is, look at this. I think the CEO says, I think the macro issue in the United States is really an e-commerce reset. Now that's interesting. During the pandemic, e-commerce peaked around 22%. Right now it's around 18 or 19%, and it used to be around 16%. So it's higher than where it used to be, but it's definitely fallen. So an e-commerce reset. That's really interesting. So if you're thinking about your investments related to companies like eBay or Etsy or PayPal, right? Companies that benefit from this, it looks like we're still trending in that direction of an e-com reset. And so what do I kind of get from Fedex? I kind of get, things aren't really that bad. I mean, sure, like demand is softening. That sucks for you, Fedex, but you also attribute this to not everybody in the consumer world shutting down. You actually attribute this to an e-commerce reset. Like if the entire economy were about to fall out from under us, wouldn't you think FedEx would be like, oh my gosh, broad scale, this is terrible. That's kind of what they did last quarter, and that was concerning. But what did they revise that to this quarter? No, this is more of an e-commerce reset. This macro issue isn't like everything is falling out from under us, it's just an e-commerce issue. Now, when we combine that with Nike, both of these companies are actually not giving us a worst case scenario outlook. They're kind of like, yeah, there are problems, but this is not hell that we're going into. And sure, they're not saying, hey, everything's going to the moon, which would actually be bad for inflationary purposes. There are plenty of disinflationary anchors that we see in these reports. But overall, in my opinion, both of these reports combined, and you have your own opinion, of course, are more bullish than bearish. Now, I think it's personally too soon to YOLO in. It's too soon to say, that's it, we're definitely going to the moon. This is why I prefer finding straddles, whether you're selling or buying straddles right now, because you kind of get the optionality in both directions. Things leg down, great, fine, you profit. Things leg up, great, fine, you can profit. Especially if you get a really good stretch to either side, which is what you're hoping for with straddles. What you don't want is things to be constant. But I think, with straddles that is, but I think what these reports give us is a little bit of a bullish tilt, right? If we had to go on a scale of 1 to 10, 1 being bearish, 10 being bullish, where is this? This is probably a 6.5. And I think markets have been pricing in like a 3. So this could be the beginning of a little bit of a small taste of a Santa Claus rally, dare I say it? But I want to be very careful because the Santa Claus rally is one that could still get sold off. Remember, the year isn't over. Tax loss harvesting isn't over. Most retail buys in January, not in December. Most retail sells in December. So keep that in mind. Be prepared. But some really cool insights that I actually, again, think tilt bullish. Let me know what you think in the comments down below. Thanks for watching, and check out the programs on Building Your Wealth, link down below. They're the only sponsor for this channel, and we have a beautiful holidays coupon code for you, link below.